Welcome, everyone. Today, we're unpacking MINISO Group's unaudited financial results for the first quarter of 2026. Now, if you follow global retail even a little bit, you already know MINISO has been making some seriously aggressive moves lately. But honestly, this latest report reveals a level of financial growth that caught a lot of people totally by surprise. It's a real game changer. Let's dive in and break down exactly how they pulled this off.
Okay, so here's our roadmap for today's explainer. We'll start with 1 point, smashing Q1 expectations, move into 2, the MNSO store boom, then cover 3, overseas expansion and globalization, 4, Top Toys rapid rise, 5, margins and shareholder value, and finally 6, looking ahead to 2026. All right, kicking things right off with Section 1, smashing Q1 expectations, a record-breaking start to 2026.
Just take a second to look at this single figure, 28.5%. That is the massive year-over-year jump in overall group revenue, bringing their total revenue to a staggering RMB $5.68 billion. I mean, for a retailer of this absolute size, logging nearly 30% growth in a single quarter is literally phenomenal. So what's actually driving this? Well, it boils down to a very healthy mid-single-digit same-store sales growth. Basically, they aren't just opening up new locations, the stores they already have are generating significantly more cash.
But hey, if you think that revenue growth is impressive, wait until you see how it builds on the operating profit side. Boom, 114.3%. That is the surge in operating profit, reaching an awesome RMB 1.52 billion for the quarter. To put that into perspective, it means their profit is growing significantly faster than their revenue. And if you're an investor, that is exactly what you want to see. It shows massive operational leverage.
And you definitely don't just have to take my word for it. Here is exactly how Gu Fuye, the founder, chairman, and CEO of MINISO, framed it. Revenue on group level grew by 28.5% YOY, kicking off 2026 by outperforming our previous expectation. You know, when leadership comes out and explicitly states that a quarter beat their own internal targets, that signals an underlying momentum that is genuinely outpacing the traditional retail environment right now.
Moving right along to Section 2, the MINISO store boom. Domestic resilience and relentless expansion.
797. Yep, that is the net increase in stores year over year across the entire group. Just pause for a second and think about the sheer logistics of that. Successfully opening, stocking, and staffing nearly 800 profitable retail locations in a 12-month period. That is a massive undertaking. So, where are all those new stores actually going? Let's break it down. As of March 31st, 2026, group total stores hit 8,565. Now, the lion's share is obviously still the MINISO brand over in the Chinese mainland, sitting comfortably at 4,593 stores. But look closely at that MINISO overseas number, 3,617 stores. That international footprint is rapidly catching up to the domestic base. Oh, and then we have 355 stores for their pop toy brand, Top Toy. And trust me, we will definitely be talking more about them in just a minute.
Now, before we start crossing borders, we really have to recognize the sheer health of their domestic Chinese market. The core brand in the Chinese mainland achieved a 29.6% year-over-year revenue growth, but here is the absolutely crucial point. This marks the 5th consecutive quarter of accelerating growth in China, totally driven by solid high single-digit same-store sales growth. In a mature market where a lot of retailers are frankly struggling to keep their momentum, MINISO is actually speeding up. Which brings us to Section 3, overseas expansion and globalization, taking the brand to the world.
All right, let's follow the money and see exactly where MINISO brand revenue is coming from. Currently, 62.5% comes from the Chinese mainland, while 37.5% comes from overseas markets. But make no mistake, that 37.5% is a very fast-growing slice of the pie. Overseas revenue grew 21.9% year-over-year to nearly RMB 1.94 billion. And that's powered by a nice, steady, low single-digit same-store sales growth.
The future direction of this company becomes crystal clear when we look at the new builds. A remarkable 56% of new MINISO stores opened in the past 12 months were located in overseas markets. They added 404 new international locations year over year. The capital, the strategic focus, the prime real estate expansion, it's all undeniably pivoting straight to global markets.
But how on earth are they managing two very different beasts? Well, domestically, it's all about optimization, accelerating same-store sales growth and refining the product mix for a mature, established consumer base. But overseas, management uses a really specific term for this,
Glocalization. This isn't just about lazy copy-pasting, exporting a Chinese store and calling it a day. It means integrating local talent into regional headquarters, actually tailoring product offerings to fit local tastes, and optimizing regional execution. This nuanced approach is exactly why they are successfully unleashing fresh growth across completely different cultures.
Now, let's shift gears to Section 4, Top Toy's Rapid Rise, the explosive Pop Toy spinoff.
Okay, this next number jumps right off the page. 51.4%. That is the year-over-year revenue growth for Top Toy, generating an incredible RMB $514.5 million in just the first quarter alone. I mean, for a spin-off brand, hitting over $500 million RMB in a single quarter with over 50% growth, that's spectacular. It absolutely proves that MINISO isn't just some one-trick lifestyle retailer. They have successfully incubated a secondary juggernaut right in the middle of a highly trendy sector.
And you can see that rapid rise perfectly reflected in TP Toy's physical footprint. Total stores have now reached 355. They managed a net addition of 75 new stores compared to last year. Management notes this sustains the robust growth momentum in the larger pop toy industry. They've really managed to tap into a collector and consumer culture that is super engaged and, clearly, highly profitable.
Down to the brass tacks. Section 5, Margins and Shareholder Value, translating growth into profit.
Okay, we need to carefully unpack these profitability metrics because there's a bit of nuance here. First off, gross margin actually contracted just a tiny bit, slipping from 44.2% down to 43.3%. Why? Primarily due to the revenue mix. Basically, a slightly lower contribution from their higher margin overseas business relative to that massive domestic boom we talked about. Now, look at that second bullet. Unadjusted profit for the period grew an insane 199.7%. We will explain that anomaly in a second. But even if we strip out all that noise and just look at the adjusted net profit excluding foreign exchange, the core business still showed really healthy, predictable growth of 8.1% year-over-year, reaching RMB 633.1 million.
So, what is the big mystery behind that massive 199.7% unadjusted profit jump? Well, it turns out MINISO has been making some incredibly lucrative strategic investments on the side. They recorded a massive RMB 874.6 million unrealized mark-to-market gain from an early-stage, pre-IPO investment in the AI industry. Seriously, so the main takeaway here is that while their core retail business is exceptionally healthy, their corporate treasury is also making these brilliant capital allocations that are dramatically boosting their unadjusted bottom line. Talk about a golden touch.
And the best part? They are actively passing this financial health right back to the investors. Listen to this statement from CFO Eason Zhang. In April and May 2026, we distributed cash dividends of US $115.8 million, bringing our shareholders' returns totaling RMB 6.2 billion since our US IPO. That is a massive amount of cash to return. They are essentially a cash-generating machine, totally committed to stable, foreseeable returns for the people backing them.
Finally, let's look forward. Section 6, Looking Ahead to 2026, Valuation and IP Strategies.
On the earnings call, CEO Gu Fuye did not mince words. He bluntly stated, "I believe MINISO Group's current valuation has yet to reflect its true intrinsic potential." Actually, scratch that. He didn't just talk the talk. He announced his personal intention to increase his own stock holdings, and the company itself is planning to conduct even more share repurchases. Look, when a CEO is buying their own stock after nearly 30% revenue growth, it is a profound statement of confidence that the broader market is currently undervaluing their upward trajectory. So how exactly do they force the market to wake up and see that intrinsic value? Their playbook for the second half of 2026 is laser-focused. Step 1, deepen that highly profitable globalization push. Step 2, expand their multidimensional IP matrix, meaning way more exclusive character licensing, which always drives foot traffic and higher margins. Step 3, continuously optimize the product mix, keeping the shelves fresh and exciting. And Step 4, maintain rigorous, disciplined cost control. It's a really balanced formula of aggressive growth paired with prudent budgeting. Which leaves us with one final big question to ponder. Will MINISO's aggressive IP matrix and their absolute masterclass in globalization be enough to correct a market valuation that management insists is far too low? They're opening stores at a dizzying pace, they're sitting on massive cash piles, and they're successfully spinning off hit brands like Top Toy. The Q1 numbers literally prove the machine is working perfectly. The only question now is, when will the rest of the world truly catch on? Thanks for joining me on this explainer today.
Keep learning, and I'll catch you on the next deep dive.